Let's get right to it. Ignore the headline number on the KSPI. What we're seeing is not a broad-based panic. The capital leaving semiconductors is a highly strategic rotation, a deliberate shift into industrial and EV supply chain nodes ahead of the US Open.
And this is the shock number they want you to see. Nearly $1 billion in foreign capital outflows. It's designed to trigger the alarm bells, but it's just noise. The real signal is buried deeper.
All right, let's break this down. First, we have to address the obvious thesis on the table, the tech sell-off narrative.
Okay, so the data shows a massive 1.35 trillion won exit. This wasn't a scattergun approach. This was a targeted strike, aimed directly at the most heavily accumulated positions in the electronics sector, and you can see it right there on the heat map. Samsung and SK Hynix are glowing red.
And look at what was being sold. We're talking about HBM3E chips. These are the absolute crown jewels of the entire AI build-out. So this is not a vote against the technology itself. It's smart money, reacting to a weaker won and rising local yields, deciding to take profits. And when that happens, you always sell your biggest winners first. But that's only half the story. Now we look at the other side of the ledger. This is where the real intelligence is, the part the headlines always miss. Here's the counter signal. While all that money was rushing out, nearly $200 million was quietly flowing in. The capital didn't just evaporate from the market, it was redeployed. And where did it go? It rotated tactically, straight into key supply chain nodes that have lower accumulated positioning. We're talking Samsung SDI for EV batteries, Koyoung for process equipment, and LG Display. You see, this isn't a retreat. This is reloading. This move into Samsung SDI is a perfect example. This isn't just a bet on one company. It's a strong read-through for the entire EV industrial chain. It's a calculated rebalancing away from the overextended AI names. So let's synthesize this. We have the outflows, we have the inflows. What's the actionable vector for the US Open? This is where we find our edge. You have to understand what kind of market we're in. This isn't a uniform liquidation event. That's a panic where everything gets sold. No, the data confirms we are in a sequencing regime. They're exiting high-gain positions to de-risk while simultaneously adding to less extended positions. It's a classic rotation. And here's how we track it. I call this the canary protocol. That signal activation in Koyoung up plus 11.49%. That's our canary. It confirms a rotation into process equipment. And that signal points us directly to its US counterparts, KLAC and AMAT. The same logic applies to the Samsung SDI inflow, which signals a preloading of the industrial EV chain. So this is the central question we have to resolve. The supply chain data is screaming bullish rotation, but we have macro conflicts on the horizon, including a pending statement on Iran that could absolutely throw a wrench in the works. All right, analysis is complete. We now move to the battle plan.
Remember the first rule. Do not trade the headline. Trade the supply chain. Now we translate this signal into a precise execution plan.
Watch for the entry signal. We enter long NQ futures only if the SOX index and NVDA are jointly positive. Do not act without this confirmation. Know your exit. If we break 26,000, the thesis is invalidated. The signal reclassifies as global AI de-risking, and all long exposure is cut immediately. Watch the macro overrides. If the 10-year yield breaks 4.33% or the dollar index surpasses 98.3, the entire equity signal is nullified. Stand down. Cash is a position. Here is your final checklist before the open. 1. Watch pre-market volume on NVIDIA, KLA, and Applied Materials. 2. Confirm the volume supports the rotation thesis. 3. Invalidate the entire plan if our macro conditions are breached. Execute this protocol without deviation. No exceptions. The signal is broadcast from Asia hours before New York opens. If you want that edge before the rest of the market wakes up, be here.